Welcome back to Taxes Made Simple. Today we'll be going over top 5 tax strategies that millionaires use. Let's begin. Now, before we get started, I want you guys to know a little bit about my background. I'm a tax strategist. I decided not to become a CPA. And part of the reason I decided not to become a CPA is because I focus on helping billionaires and millionaires leverage the tax codes to reduce their tax bill. So I spend most of my time studying tax law, whereas my CPAs, who are certified public accountants, they're working on a lot of tax returns throughout the year. As someone who's not spending a lot of time working on tax returns and reviewing returns, I'm able to see which laws are being leveraged for my clients, which laws are not being leveraged for my clients, and where the opportunities are being missed. I currently work with over 400 millionaires, so there are certain strategies that I've been able to leverage for these millionaires that I want to share with you here today. And today we'll be going over the top 5 strategies that millionaires use to pay little to zero in taxes. Let's begin. Strategy number 1, millionaires use management companies. Now you might be thinking, what would they use a management company for? But think about it. If you have a business that's earning a lot of income, there may be only so many things you can do within the tax code to reduce the amount of income that shows up on your tax return as a shareholder underneath your business. One of the many strategies that business owners leverage is implementing a management company. A management company can own a portion of your original business. And rather than having the management company file tax returns at the same time that your business files tax returns, your management company can have a different fiscal year end. If your original business is paying management expenses to another business, then there's going to be an expense on the original business's tax return. If this management company has a different year end, technically you are buying yourself time to figure out a way to offset the income in this new management company that you've created. Millionaires are all about tax avoidance. And one of the ways millionaires avoid taxes is by buying themselves time to create additional expenses within their business. One of the ways you can do this is by establishing a management company that does have a different fiscal year end to buy yourself time to create the expenses and the strategies to reduce your tax bill in the management company. Strategy number 2. Millionaires use the 179 vehicle deduction. The 179 vehicle deduction allows for small-based business owners to get a tax deduction of 100% of the vehicle's purchase price if the vehicle is a qualified 179 vehicle and if the vehicle weighs over 6,000 pounds and is used for business. You have the ability as a small-based business owner, whether you're a millionaire or not, to leverage Code Section 179. However, many millionaires are looking for big write-offs. I have clients who are purchasing G-Wagons, the Tesla Model X, and even the Rolls-Royce Cullinan. And these are big, expensive cars. These cars sometimes are valued at $150,000, $250,000, even $350,000. If my client were to make a down payment on the car, whether he purchased the entire car or he just decided to make a down payment to purchase the car, he is going to be, or she is going to be able to take a write-off for the entire purchase amount of that car underneath Code Section 179. This is a beautiful benefit for business owners who need big write-offs to be able to save money, and it's a way for a business owner to get a new vehicle. Number 3, millionaires use bonus depreciation with their businesses to reduce their tax bill. Bonus depreciation was a part of the Tax Cuts Jobs Act that was implemented in 2018. It's a new tax law change that allows for business owners who have expenses after the year of 2017 to be able to expense those business items all in 1 year. Rather than taking an expense and depreciating the expense over 5 or 7 years, depending on its depreciable life, you can pay for a piece of equipment or an item within your business and write off the entire purchase amount in 1 year underneath bonus depreciation. There are pros and cons to leveraging bonus depreciation. One of the pros to leveraging bonus depreciation is that you're getting a big write-off all in 1 year. If you were to buy a new camera or a new laptop or a piece of equipment for your business, rather than taking that write-off over the course of 5 years or 7 years, you can write off that item in 1 year, reducing your taxable income immediately. For a millionaire, that could be a write-off that they need urgently. Now, the downside is if you purchase this equipment and you decide to expense the equipment all in 1 year under bonus depreciation, you have taken all of the depreciation in 1 year. So the following year, you will not have those same benefits, that same write-off on your tax return, as you've already taken advantage of it. Number 4, millionaires use net operating loss carrybacks and net operating loss carry-forwards. Net operating losses means that you have a loss within your business, and those losses can go to offset other income. Now, if you are utilizing losses and carrying them back into a previous year that you've already paid taxes on, then chances are you have the ability to receive back a federal and a state refund on taxes that have already been paid. As a part of the CARES Act, business owners in the years of 2019, 2018, and even 2017 have the ability to utilize the NOL carryback to move expenses from this year of 2020 into a previously filed tax return to receive back a federal refund from the IRS or a state refund from the state that has taxed them. This is one way a business owner can help themselves during the pandemic that we've been faced with, and also a way for millionaires to reduce their tax bill. Now, outside of NOL carrybacks, there are also NOL carry forwards. In the event that you're not able to utilize all of your losses in the current year, a business owner can roll over their losses to the next year. So if a business owner was savvy enough, strategic enough to be able to position their business to have a loss, they can utilize those losses for the following year to offset new taxable income, reducing the amount of taxes that they're going to owe in the following year. Another way for business owners to just strategize to make sure that they're avoiding taxes legally. And tax strategy number 5. When you are a millionaire, chances are you're at a place where you would like to be philanthropic. However, being philanthropic can also lead to tax deductions. One of the many ways business owners can receive tax deductions is by establishing their own private family foundation. One of the beautiful benefits of a private family foundation is it's your own foundation. So you, as the business owner, have control over how the foundation operates, as well as how the money is being distributed to a qualified charity or organization. One of the benefits that millionaires and other taxpayers can receive by having a foundation is you, as a taxpayer, are able to contribute up to 30% of your adjusted gross income into your own private family foundation, and you will receive a tax deduction for it. A private family foundation will reduce your taxable income, but also allow you to be philanthropic at the same time. The caveat is that 5% of the value of the private foundation has to go out in some type of philanthropic space, charity, or organization, which means it's a way for you to get your family members to join a part of your foundation to contribute to a charity or an organization. Most millionaires and most big entrepreneurs are utilizing their family members within their companies to reduce their tax bill. And one of the ways that they use their family members is in the private family foundation. The foundation can hire employees, including your children, including yourself, to pull money out of the foundation. Yes, this money is going to be taxed, but it's another way for you to get money to other children who may have a lower tax bracket than you and your business. Now that we've gone over 5 strategies that help millionaires reduce their tax bills, you can determine which ones you will be implementing as you continue to grow your business. Keep in mind, it doesn't take being a millionaire to leverage these tax laws. It takes understanding and action. My name is Karlton and I just want to say thank you for joining this video today. If you liked it, go ahead and give me a thumbs up. Feel free to hit the subscribe button. I'll see you on the next one.